It's time we talk about basic understanding of CVP analysis, about the cost of loan profit environment that we are familiar with. Let's start with contribution per unit item and define what that is. So we have contribution per unit. The way we calculate it is we take unit selling price, so selling price per unit, and we deduct from it variable cost per unit. So basically contribution is the difference between sales price and variable cost, whether that is per unit or total, and no different in the formula. The next item is profit from a different angle. So we have profit. We all know that profit is all my revenues minus all my expenses. But here we will do it slightly differently. We have sales volume, how many items we sold. We multiply it by the contribution per unit, and we deduct from it the fixed cost, total fixed cost, of course, because sales volume here multiplied by contribution per unit gives us the total contribution, and the total contribution we said here is sales price minus variable cost. So sales price total minus variable cost total and minus fixed cost total gives us the total profit. So no rocket science here. Next thing that I would like to cover is break-even point. And we all know that break-even point is the point where we do not have any profit or any loss. So we have nil result, break-even point. And when we say break-even point, we mean number of items that we need to sell in order to arrive at a break-even, in order to make no profit, no loss. And you could imagine that that is where our sales price equals to all our expenses. Our sales revenue, so the total revenue, equals to all the expenses that we have. So what we can do is to calculate it is with a quick formula to take fixed cost, of course we are talking about the total, and divide it by contribution per unit. And we will come back to this formula and talk about how we advance with this formula. But for now, let's just put it there as it is. We will talk about so next one is contribution sales ratio. It's one of the easiest formula in the whole ACCA, I think, and that's because what we have is in the name. So we take the contribution and we divide it by sales, and this gives us contribution sales ratio, CS ratio, as some will call it. Let's move on. Let's talk about sales revenue at break-even point, and that is at the break-even point how much revenue we make. So sales revenue at break-even point, and this is equal to fixed cost divided by the CS ratio. I will dedicate one video for this formula here and for this formula here, so that you understand the logic behind these two formula. But for now, let's not waste our time on it. Let's just move on to see what else we need to remind ourselves about. The next one is margin of safety. You may actually recall this term from previous studies, and that is actually I did a wrong step here with this, so I'll erase it. So that is the difference between my budgeted sales unit and my break-even sales unit. So I have my budgeted units to sell. I deduct from it my break-even that I calculated in the previous one of the previous formula, break-even actually units. So that will give me the margin of safety that I need to know. The next thing that I will cover is margin of safety as in terms of percentage. So margin of safety percentages. And that is, now it's time for this line here. So my budgeted sales minus break-even sales and divided again by the budgeted sales. And multiply, of course, by 100% because the result is going to be in percentage. Lastly, what we need to remind ourselves about is sales volume to achieve a target profit. Units, let's say units to sell for target profit. The formula is fairly simple. That's my fixed cost plus my target profit divided by contribution per unit. And that is a third formula that I am going to cover together with the previous two in one of the next videos, trying to explain in easy words how we come up with short formulas. Because from here, it is not really understood why we take, let's say here, why we take fixed cost and divide it by CS ratio. So in the next video, I will try to cover them. But for now, this video was all about what we need to remember always if we want to tackle a question in CVP analysis section.